Investment vehicles are not created equal. Some are built for speed, others for safety. But high performance, that takes intelligence, precision, strategy, purpose. With VMW, VM Wealth Management, your money moves forward, not aimlessly, not recklessly, but with intention. Whether you're just starting out, accelerating toward a goal, or steering into legacy. Professionally managed, driven by performance. Put your money in motion. VM Wealth Management. Transform your everyday.
Your money should be multitasking for you. With VM Wealth's unit trust portfolios, your money works harder, responding to the markets and producing gains that have consistently beaten projections for over a decade. With our portfolios, your money works smarter, adjusting and pivoting based on research and data analysis from an award-winning team, all while you do whatever you want. Instead of just investing, invest with VM Wealth. Transformation starts here. Visit transform.myvmgroup.com. Let's go.
Investment vehicles are not created equal. Some are built for speed, others for safety. But high performance, that takes intelligence, precision, strategy, purpose. With VMW, VM Wealth Management, your money moves forward, not aimlessly, not recklessly, but with intention. Whether you're just starting out, accelerating toward a goal, or steering into legacy. Professionally managed, driven by performance. Put your money in motion. VM Wealth Management. Transform your everyday.
Your money should be multitasking for you. With VM Wealth's unit trust portfolios, your money works harder, responding to the markets and producing gains that have consistently beaten projections for over a decade. With our portfolios, your money works smarter, adjusting and pivoting based on research and data analysis from an award-winning team, all while you do whatever you want. Instead of just investing, invest with VM Wealth. Transformation starts here. Visit transform.myvmgroup.com. Let's go.
Investment vehicles are not created equal. Some are built for speed, others for safety. But high performance, that takes intelligence, precision, strategy, purpose. With VMW, VM Wealth Management, your money moves forward, not aimlessly, not recklessly, but with intention. Whether you're just starting out, accelerating toward a goal, or steering into legacy. Professionally managed, driven by performance. Put your money in motion. VM Wealth Management. Transform your everyday.
Your money should be multitasking for you. With VM Wealth's unit trust portfolios, your money works harder, responding to the markets and producing gains that have consistently beaten projections for over a decade. With our portfolios, your money works smarter, adjusting and pivoting based on research and data analysis from an award-winning team, all while you do whatever you want. Instead of just investing, invest with VM Wealth. Transformation starts here. Visit transform.myvmgroup.com. Let's go.
Investment vehicles are not created equal. Some are built for speed, others for safety. But high performance, that takes intelligence, precision, strategy, purpose. With VMW, VM Wealth Management, your money moves forward, not aimlessly, not recklessly, but with intention. Whether you're just starting out, accelerating toward a goal, or steering into legacy. Professionally managed, driven by performance. Put your money in motion. VM Wealth Management. Transform your everyday.
Your money should be multitasking for you. With VM Wealth's unit trust portfolios, your money works harder, responding to the markets and producing gains that have consistently beaten projections for over a decade. With our portfolios, your money works smarter, adjusting and pivoting based on research and data analysis from an award-winning team, all while you do whatever you want. Instead of just investing, invest with VM Wealth. Transformation starts here. Visit transform.myvmgroup.com. Let's go.
Investment vehicles are not created equal. Some are built for speed, others for safety. But high performance, that takes intelligence, precision, strategy, purpose. With VMW, VM Wealth Management, your money moves forward, not aimlessly, not recklessly, but with intention. Whether you're just starting out, accelerating toward a goal, or steering into legacy. Investment vehicles are not created equal. Some are built for speed, others for safety. But high performance, that takes intelligence, precision, strategy, purpose. With VMW, VM Wealth Management, your money moves forward, not aimlessly, not recklessly, but with intention. Whether you're just starting out, accelerating toward a goal, or steering into legacy. Professionally managed, driven by performance. Put your money in motion. VM Wealth Management. Transform your everyday.
Your money should be multitasking for you. With VMWealth's unit trust portfolios, your money works harder, responding to the markets and producing gains that have consistently beaten projections for over a decade. With our portfolios, your money works smarter, adjusting and pivoting based on research and data analysis from an award-winning team, all while you do whatever you want. Instead of just investing, invest with VMWealth. Transformation starts here. Visit transform.myvmgroup.com. Let's go.
Investment vehicles are not created equal. Some are built for speed, others for safety. But high performance, that takes intelligence, precision, strategy, purpose. With VMW, VM Wealth Management, your money moves forward, not aimlessly, not recklessly, but with intention. Whether you're just starting out, accelerating toward a goal, or steering into legacy. Professionally managed, driven by performance. Put your money in motion. VM Wealth Management. Transform your everyday.
Your money should be multitasking for you. With VM Wealth's unit trust portfolios, your money works harder, responding to the markets and producing gains that have consistently beaten projections for over a decade. With our portfolios, your money works smarter, adjusting and pivoting based on research and data analysis from an award-winning team, all while you do whatever you want. Instead of just investing, invest with VM Wealth. Transformation starts here. Visit transform.myvmgroup.com. Let's go.
Investment vehicles are not created equal. Some are built for speed, others for safety. But high performance, that takes intelligence, precision, strategy, purpose. With VMW, VM Wealth Management, your money moves forward, not aimlessly, not recklessly, but with intention. Whether you're just starting out, accelerating toward a goal, or steering into legacy. Professionally managed, driven by performance. Put your money in motion. VM Wealth Management. Transform your everyday.
Your money should be multitasking for you. With VM Wealth's unit trust portfolios, your money.
Damien. Good afternoon, everyone. Welcome to the 9th Annual General Meeting of VM Investments Limited. Before we do anything else, I invite Maria Evelyn Robinson to lead us in prayer.
Thank you. Good afternoon, ladies and gentlemen. Let us pray. Heavenly Father, we thank you for bringing us together today for this 9th Annual General Meeting of VM Investments Limited. We're grateful for your guidance, protection, and blessing throughout the past year. As we conduct this meeting, we ask for your guidance, wisdom, and understanding, and sound judgment in all of our discussions and decisions. Grant us the ability to work together in a spirit of respect, cooperation, and integrity, always seeking the best for the organization and those it serves. May our deliberations be productive and our actions responsible. Bless all employees, officers, and stakeholders who contribute to the success of this organization. We pray for continued growth, stability, and prosperity in the year ahead, and we ask for your guidance in all that we do. We ask these in your holy name. Amen.
Amen. Thank you, Maria. Let us begin this afternoon's proceedings by moving a motion for the notice of the meeting to be taken as read. Could I have such a motion? State your name, sir. Lancel Bloomfield moves. And can I have a second for the motion? Anna Allwood. Anna, sorry. Thank you. On behalf of the Board of Directors, welcome to the 9th Public Annual General Meeting of VM Investments Limited. I'm pleased to be joined this afternoon by my fellow directors, both here and online. With us here at Halfway Tree are Mr. Dennis Cohen. Dennis, just indicate yourself. Yes. Mrs. Maria Evelyn Robinson, who just prayed for us. Maria, welcome. Mr. Courtney Campbell. Courtney. Mr. Frederick Williams. Oh, honest. Okay. Frederick is our Group Financial Controller and a Director here. Mr. Rez Burchardson, VMIL CEO. And lastly, but by no means least, our newest Director, Ms. Nsambi Ricketts. Nsambi, thank you for coming. Joining us online are Directors Vikram Demon, Milton Samuda, and Noel Hahn. Welcome, Directors, and welcome to other executives and leaders of VM who are with us, as well as all guests and members of the media. On stage with me are Courtney Campbell, President and CEO of VM Group, who you just saw, Rez Burchardson, CEO of VMIL and VM Wealth Management, and Stuart Andrade, Assistant Vice President of Finance for VMIL and VM Wealth Management. Before we proceed with the business of the meeting, I want to pause to acknowledge the sad reality that since we last convened in this way, we have lost 2 directors and stalwarts of VMIL. Director Philip Silvera, who passed away last year, and Director Matthew Wright, who passed away in May. Mr. Silvera was a long-serving and highly respected member of the VMIL Board of Directors. He served with distinction, providing strategic oversight and guidance, shaped by decades of financial and executive experience. He also chaired the audit and risk committees of VMIL, where his expertise, diligence, and integrity were valuable to the company's governance framework. His contributions played a significant role in strengthening VMIL's risk management practices and overall corporate accountability. And Philip would have been, Philip is a retired financial controller and deputy CEO of VMBS, and then became a director. So he has been with us. He has shaped us for decades, and quite the man. Matthew Wright was a distinguished member of the VM family and a deeply respected voice around our board table. Over the years, he served with dedication across several VM entities, including as chairman of VM Finance UK and deputy chairman of the group board. He brought to the group exceptional financial expertise, sound judgment, strategic insight, and a sharp global perspective. Beyond his professional accomplishments, those of us who had the privilege of working alongside him will remember Matthew for his quiet strength, his intellect, his wit, and the calm, thoughtful manner in which he approached every discussion and decision. I invite those of us here to stand and those online to pause as we observe a moment of silence in honor of these 2 incredible directors, Philip Silvera and Matthew Wright. Thank you very much. Rest in peace, Philip and Matthew. Now, for those joining via private live stream, the mechanisms are in place for you to participate fully. To move or second a motion, select the Move or Second button located under the Votes tab on the right side of your screen. Once a poll is launched, it will automatically appear on your screen for voting. Alternatively, select the Votes tab on the right side of your screen and choose the resolution you wish to vote on. Click Vote, select For or Against, then confirm and submit your vote once you are certain. During the Q&A session, click the Q&A icon located to the right of your screen again. Enter your question or comment in the text box to the lower right, and after typing your question, click the Send button located to the right of the text box. For those of you here, you just put up your hand. Okay, low tech. Again, a very warm welcome to you all. We have lots to share from an interesting year, one which set the stage for the recent resumption of our dividend payments, which I'm certain our shareholders happily welcomed. You notice I led with that. The first item on the agenda is the presentation of the auditor's report and statement of accounts for the year ended 31 December 2025, as well as the director's report. Damian Reed of KPMG for VM Investments, auditors for VM Investments, will now come forward to present the auditor's report and statement of accounts. Damian.
Thanks, Mr. Chairman. Good afternoon, everyone. So, most of you would know that the auditor's report tend to be very lengthy, but I'll try to make it as brief as I can today. Now, the auditor's report comprises two parts: the report on the financial statements and also a report on other matters as required by the Jamaica Companies Act. I'll now take you through a report on the financial statements. To the members of VM Investments Limited, opinion. We have audited the separate financial statements of VM Investment Limited, the company, and the consolidated financial statements of the company and its subsidiary, the group, as set out on pages 101 to 158, which comprises the group's and the company's statements of financial position as at December 31st, 2025, the group's and company's income statements of comprehensive income, changes in equity and its cash flows for the year then ended, and notes comprising material accounting policies and other explanatory information. In our opinion, the accompanying financial statements give a true and fair view of the financial position of the group and the company as at December 31st, 2025, and of the group's and company's financial performance and cash flows for the year then ended in accordance with IFRS accounting standards, as issued by the International Accounting Standards Board, IFRS accounting standards, and in the manner required by the Jamaican Companies Act. Basis for opinion. We conducted our audit in accordance with International Standards on Auditing, ISAs. Our responsibility under those standards are further described in the auditor's responsibility for the audit of the financial statement section of our report. We are independent of the group and the company in accordance with International Ethics Standards Board for Accountants, International Code of Ethics for Professional Accountants, including International Independent Standards, ISBA Code. We have fulfilled all our other ethical responsibilities in accordance with the ISBA Code. We believe that the audit evidence we have obtained is sufficient and appropriate to provide a basis for our opinion. Key audit matter. Key audit matters are those matters that in our professional judgment were of most significance in our audit of the financial statements for the current period. These matters were described in the context of our audit of the financial statements as a whole and informing our opinion thereon, and we do not provide a separate opinion on these matters. Fair value of level 3 investments. The key audit matter, see note 6 to 29 and 29. The groups and the company holds level 3 investments of 1,346,726,000, 2024, 1,095,591,000, measured at fair value, which are instruments for which quoted prices are not available. Valuation of these investments requires the use of unobservable input, which requires significant estimation and the selection of an appropriate valuation method. How the matter was addressed in our audit. Our procedures in this area included the following: assessing the reasonableness of significant assumption and suitability of the valuation model used by the group and the company, evaluating the valuation, involving our valuation specialists to determine or obtain yield or price of specific securities and comparing these yield or prices to those used by the group and the company. Assessing the adequacy of the disclosure, including the degree of estimation uncertainty involved in determining fair values. Other matter. Management is responsible for other information. Other information comprises the information included in the annual report, but does not include the financial statements and our auditor's report thereon. The annual report is expected to be made available to us after the date of this auditor's report. Our opinion on the financial statement does not cover other information and will not express any form of assurance conclusion thereon. In connection with the audit of the financial statements, our responsibility is to read the other information identified above when it becomes available, and in doing so, consider whether the other information is materially inconsistent with the financial statements or knowledge obtained in the audit, or otherwise appears to be materially misstated. When we read the annual report, if we conclude that there is a material misstatement therein, we are required to communicate the matter to those charged with governance. Responsibilities of management and those charged with governance for the financial statements. Management is responsible for the preparation of the financial statements that give a true and fair view in accordance with IFRS accounting standards and the Jamaican Companies Act. And for such internal control as management determine is necessary to enable the preparation of the financial statements that are free from material misstatement, whether due to fraud or error. In preparing the financial statements, management is responsible for assessing the group's and the company's ability to continue as a going concern, disclosing as appropriate matters relating to going concern, and using the going concern basis of accounting unless management either intends to liquidate the group and or the company, to cease operation, or has no realistic alternative but to do so. Those charged with governance are responsible for overseeing the group's and the company's financial reporting process. Auditor's responsibility for the audit of the financial statements. Our objectives are to obtain reasonable assurance about whether the financial statements as a whole are free from material misstatements, whether due to fraud or error, and to issue an auditor's report that includes our opinion. Reasonable assurance is a high level of assurance, but is not a guarantee that an audit conducted in accordance with ISAs will always detect a material misstatement when it exists. Misstatement can arise from fraud or error and are considered material if individually or in aggregate, they could reasonably be expected to influence the economic decision of the users taken on the basis of these financial statements. A further description of our responsibilities for the audit of the financial statements is included in the appendix to the auditor's report. This description is located on page 100, forms part of our auditor's report. I'll now go into our report on matters as required by the Jamaica Companies Act. We have obtained all the information and explanation which, to the best of our knowledge and belief, were necessary for the purposes of our audit. In our opinion, proper accounting records have been maintained so far as appears from our examination of those records, and the financial statements which are in agreement therewith give the information required by the Jamaican Companies Act in the manner required. The audit partner on the audit resulting in this independent auditor's report is Damian D. Reed, KPMG, Chartered Accountants, Kingston, Jamaica, March 31st, 2026. Thank you.
Thank you. Thank you, Damian. And a special thank you to KPMG, who will retire at this AGM as auditors of the company. We appreciate the service provided over the years, and we remain close confidants and friends with KPMG. Thank you. I'll now present the chairman's message. The 2025 financial year unfolded within a complex global environment as economies continued to adjust to the effects of tighter monetary policy, moderating inflation, and ongoing geopolitical uncertainty. Global growth remained steady but subdued, with expansion estimated at approximately 3.2%, reflecting a more measured pace of economic activity relative to recent years. Financial conditions, while stabilizing, remain constrained, with higher interest rates continuing to influence capital flows, investment decisions, and overall market liquidity. Within the Caribbean, growth similarly moderated as economies navigated external pressures alongside domestic constraints, including exposure to climate-related disruptions. Against this backdrop, Jamaica's economy continued to demonstrate resilience, supported by disciplined macroeconomic management and strengthened fiscal fundamentals. For most of the year, inflation remained broadly within the Bank of Jamaica's target range. Unemployment levels continued to trend near historic lows, and the country maintained relative stability in key economic indicators. At the beginning of the fourth quarter, however, the catastrophic weather event of Hurricane Melissa created unprecedented nationwide disruption and uncertainty, the after effects of which were still being determined as we close the year. Overall, the environment reinforced the importance of prudence, adaptability, and strategic focus across the financial services sector. Within this context, VM Investments Limited remained concentrated on executing its strategic priorities while navigating the realities of the market and responding to the needs of its client and a disaster-impacted community. For the year ended December 31, 2025, VMIL reported net profit of $165.9 million compared to $555.7 million in the prior year. Included in the 2024 results was a non-recurring gain of $422 million arising from the sale of the group's private equity interest in Caryland, which materially impacted 2024 profitability. The absence of this one-off item in 2025 accounted for the majority of the year-over-year decline in reported net profit. While the net outcome is not where we want it to be, when this positive prior year event is removed, profit after tax for 2025 increased by 24.12%, reflecting improved core operating performance. Total revenues also remained robust at $2.4 billion. In 2024, these were $2.6 billion, while total assets grew from $30.5 billion in the prior year to $35.1 billion, providing us with encouraging markers for sustainable improvement in the coming year. Performance during the year reflected the impact of prevailing market conditions, including reduced liquidity and the effects of interest rate movements. While these factors contributed to some variability in earnings, along with the naturally uneven earnings of our growing or private equity business, the core enterprise continued to demonstrate strength from its diversified sources of revenue and sustained client focus. The year was marked by continued effective strategic execution. Management advanced on our objective of building a more durable business model with emphasis on expanding fee-based income, strengthening its wealth management platform, and deepening its participation in alternative investment strategies, including private equity and real estate. This ongoing repositioning is intended to enhance stability over time, reduce exposure to market volatility, and position VMIL to capitalize on emerging opportunities across both local and regional markets. VMIL also maintained an active presence in the capital markets, supporting clients through transactions and advisory services in an environment that required both agility and expertise. These activities continue to reinforce VMIL's role as a trusted partner within the Jamaica financial ecosystem. Operationally, the business continued to invest in strengthening capabilities through technology and the more efficient deployment of talent resources, alongside enhancements to its risk management framework. While these investments contributed to an increase in operating expenses during the year, they reflect a deliberate approach to building a more scalable efficient, and future-ready organization, one that is better equipped to navigate complexity and support long-term growth. From a governance perspective, the board remained actively engaged in overseeing the company's strategic direction, risk posture, and overall performance. Indeed, in a year characterized by market volatility and weather-related crisis conditions, strong governance was essential. The board maintained a disciplined approach to oversight, supported by robust committee structures. This keen focus on governance remains fundamental to sustaining stakeholder confidence and ensuring that VMIL remains well-positioned to manage both risk and opportunities. The theme for this year's annual report, Future Ready, reflects both our current positioning and our forward-looking ambition. It speaks to an organization that is deliberately strengthening its foundations, enhancing its capabilities, diversifying its business model, and positioning itself to respond effectively to a rapidly evolving financial landscape. As we look ahead, the board remains confident in VMIL's strategic direction. We will continue to focus on deepening client relationships, expanding our investment offerings, and pursuing opportunities that support sustainable growth while maintaining a disciplined approach to risk and capital management. On behalf of the board, I extend my sincere appreciation to the leadership team and team members for their continued commitment and execution throughout the year. I also thank our clients and shareholders for their ongoing trust and confidence. We move forward with clarity of purpose and a strong foundation for the future. Thank you very much. Okay. Thank you. We'll now hear from Rez Burgesson, the CEO of VM Investments Limited. Rez will be joined by Stuart Andrade, Assistant Vice President of Finance. Rez.
Okay, good afternoon. Good afternoon, ladies and gentlemen. Before I get into my presentation, I want to express appreciation to the chairman and the board of directors for helping management to guiding management for a very challenging 2025. Also want to express appreciation to our group president and CEO, Courtney, and the team of executives, many of whom are online at this point in time, who provided lots of support to VMIL in 2025 also. Special thanks to our regulators in Jamaica and Barbados, our various partners, whether they be lawyers, auditors, actuaries, our rating agency, Caricris, and most of all our shareholders. But I certainly would like to give special commendation to Team VMIL. And notwithstanding the challenging environment, I think we put in a very credible performance. So I'd really like for you to give them a round of applause. I would have said in various annual general meetings that this business is a talent business, that it's all about attracting, retaining, developing talent to execute on the vision of the organization. So I know that we have a very committed team at VMIL, and certainly we are executing on a robust plan to create value for all our shareholders. Let me also join the chairman in expressing condolences to the families of Philip Silverio and Matthew Wright. Both gentlemen were exemplary directors. If I may go off script a bit, if you give Philip Silverio a 200-page annual report at 9 p.m., the next morning at 6 p.m., you have all the changes. You'd have read every single page, all the changes, all the grammatical errors, including alignment, exemplary leadership there. And Matthew Wright, when Matthew is in full flight, examining a credit or an investment proposal, it's a master class in investment analysis. It's a master class in credit analysis. And I just want to express our condolences to both gentlemen, but notwithstanding that they were exemplary as they served the VM Group and VMIL, and for that we're very appreciative. Okay, so what's the discussion this afternoon? We're going to talk about the foundation that we're building. We're going to talk about some of the things that we did last year, promises that we made, moments that mattered, executing in a very complex environment, turning strategy into action, performance through the numbers. Then after, number 7 will be done by Mr. Andrade. Then I will close with one slide about the business that we're building for 2027 onwards. So before I get into the numbers, I want to spend a few minutes talking about what we are and what we're building at VM Investments Limited. Our vision is to be the premier Caribbean-based investment company, creating and preserving wealth for investors globally. And the emphasis here is globally. When you look at our expansion into Barbados and eventually other markets, these moves are not accidental. They're deliberate steps towards building a regional investment platform that can serve clients, deploy capital effectively, and create long-term value for our shareholders. If you had the opportunity to read through the annual report, you'd have seen where VM Investment sits within the wider VM group. And I'm quite sure that we're all appreciative of the fact that we're a member of the VM group that has been around for 147 years. Thank you very much. VM Investments Limited is the investment arm of the group. Our reason for being is simply to deploy capital to generate attractive risk-adjusted return for all our shareholders. Today, VM Wealth Management Limited remains our largest operating business and a significant contributor to our performance. But as I've said over a number of years, VM Investments is more than a broker-dealer. We're building a diversified investment platform, one that includes traditional wealth management, capital markets, treasury activities, private and public investments, and regional growth opportunities. Now, one of the ways that we're executing on our strategy is through investments outside our core operating businesses. Kingston Properties is a good example. It is one of the larger investments within our alternative investments portfolio, an important part of our long-term capital allocation strategy. It is a global, not a local or regional, it is a global income-producing real estate platform that provides both recurring income and an opportunity for long-term capital appreciation across all markets. We'll come back to KP REIT later on in our presentation, but I just want to introduce it here so we can understand how we're deploying capital in our portfolios. Before we get into the financial performance, let's talk about the operating environment, the economic environment for 2025. If I were to say 2025 was an easy year, I'll certainly be lying. It was a very challenging year. Economic growth was flat. The average Jamaican stock declined 15%. Treasury bill yield continued to decline, but we saw volatility across all the investment markets. But in spite of these conditions, as we are paid to do, we executed, and we executed fairly well. Total assets grew by 15% to $35 billion. Net interest income increased by 23%. Our capital adequacy ratio remained comfortably above the regulatory minimum, and we also remain focused on delivering value to all our clients, ending with a net promoter score, which we are not proud of, 22, but we'll continue to work on same. One sec. I think I'm going ahead of myself. Okay. Okay, one second. Yeah, I found it. Our client portal usage grew by 102%. Now, when shareholders look at the headline numbers, you'll see revenue growth of $2.3 billion and net profit of $165 million. Very important to note was that one-off gain from investment in Caroline, But again, in various presentations, I have indicated to shareholders that as we enter the private equity space, they're going to be lumpy returns based on the liquidation or realization of value from those private equity investments. If you adjust for those one-off transactions, our underlying profits grew by 24%. What were some of the promises made in 2025? So last year, standing in this room, we spoke about a number of priorities for this business. We spoke about improving our core system, promise kept. We spoke about executing on a group online onboarding platform to bring better service experience to our customers, delivered. Our IPO Edge upgrade was executed. Our client segmentation is in high gear. We have defined our current client segments and we're now executing against that strategy. Our branch rationalization, we have streamlined our operating model, centralized key functions, and improved efficiency across the business. In terms of Barbados expansion, we have secured an investment advisor license, which has contributed to growth in assets under management, and we have further strengthened our presence in the Eastern Caribbean. What were some of the moments that mattered for us in 2025 in terms of recognition? The Jamaica Stock Exchange recognized VM Wealth as the second runner-up in best practices for member dealer websites. CARICRIS reaffirmed our credit ratings, CRI BBB, JM BBB, and JAA-. Very important to note that these ratings remain within the investment grade category and reflect the strength and stability of the business. We also continue to make progress with our corporate governance index score. We move into the AA band, and I'll spend a bit more time on same later on in the presentation. From a market activity standpoint, we're ranked number 2 on the Jamaica Stock Exchange main market in volume and value, and number 4 on the junior market. Thank you very much. Thank you very much on behalf of the team and the directors. Let's start with some key business highlights. Unit trust revenue grew by a strong 12%. We launched our constant stream portfolio, a low-risk liquidity management solution under the VM Wealth Management Unit Trust platform. And we, as I said before, we also secured our investment license in Barbados, an important milestone for regional expansion strategy. Very importantly, our Barbados Income Fund remained the top performing fund in this category for the 4th consecutive calendar year. Moving to Treasury, net interest income grew by approximately 23% year over year. And very important to note was that this was in a declining interest rate environment, which is particularly noteworthy. Our capital markets team executed 12 transactions with a total value of close to 10 billion Jamaican dollars. The largest single transaction was valued at 1.6 billion Jamaican dollars. And in the global market and digital asset trading unit, we executed a significant equity transaction valued at $2 billion, the 3rd largest equity trade for 2025. You can clap also. On the technology and innovation, because we did speak about our digital strategy, where technology is concerned, we delivered several important initiatives during the year. We completed our IPO Edge enhancement, our core system upgrade, and launch of our digital onboarding platform. These projects improve the client experience, strengthen our operating infrastructure, and support the continued digital transformation of this business. And as shareholders, you'd have seen from previous slides that these are all commitments that were made last year. Let's talk about operations, people, and ESG. Regarding our operations, we made targeted investments in our back office, automation and centralization of key functions to reduce the time takes to manage certain aspects of the business. We digitalized our risk profiling process, a digital tool that assesses client suitability for investment products. If you want to try, there's a QR code in the annual report. Very exciting thing to do if you want to understand where you are from a risk standpoint. Regard to our people, again, this business is a talent business. The acquisition, retention, and development of talent is fundamental to the long-term growth of this business. To that end, our HR engagement score, or HR Human Resource Engagement Index, rose to 74%, above international benchmark, and our leadership score improved to 78%. I know when you reconcile the performance of the business to the staff cost, to the HREI score, person are saying, well, how do we manage those staff costs? But in this business, to attract and retain talent is very expensive. And we brought on board persons to grow the business, and you'll have seen from a performance in late 2025 and our Q1 performance that we're well on our way. I want to talk about governance. I want to be clear that it's not a compliance exercise for us. It's something that we've been executing on deliberately over a number of years. Corporate governance is important because it creates an environment of trust, transparency, and accountability necessary to create long-term value. VM Investments Limited received a corporate governance index score of 90.4 in the JC recent assessment that places us in the AA band, the highest classification, and that certainly deserves a round of applause. We're in the top 10%, may I even dare say 5%, may I dare even say 1%. The industry average is double C, and we are AA. Well done, well done, well done. Certainly, the movement in our corporate governance score, as much as we're giving out the applause, much of same should go to the board of directors, and more specifically, the VM Corporate Governance Nomination and Compensation Committee that certainly led this initiative. We're seeing some encouraging trends in digital. Client enrollment on our platforms increased 46%. Our active client base increased 11%. The number of persons logging onto our platforms increased by 26%, and digital requests grew by approximately 80%. We've also introduced digital investment mandate forms and continued enhancement to the Loan Edge margin loan solution. So let's talk about some key business highlights. We spoke about asset management before. Why is asset management important? Asset management brings resilience to the business. Recurring revenues is a scalable business. It's a part of the business that we have deep expertise. And we certainly want to play a greater role in executing on that platform. Why is it important? Our target is to ensure that our asset management revenues cover all our expenses, right? It brings lots of resilience in time of challenges I would have seen in the last 5 years. I said before, Treasury delivered up a solid performance. Our capital markets unit did very well, and our trading division executed a number of important transactions. On a whole, each segment played a different role, but they're all supported by the growth of our asset management business. Let's talk about our alternative investment platform. The backbone of any economy is determined by the robustness of its SME sector. We are in that space. Why? Because we want to provide capital to business for them to expand, hire more people, launch new products, grow new markets, create value, but grow the Jamaican and Bajan economy. From our vantage point, supporting these businesses is not about generating returns for VMIL. It's about our contribution, our impact to the growth of our region. Our approach is built on 3 pillars. The first pillar is our AI or alternative investments. This is where we originate and structure proprietary transactions. Today, we have deployed capital across a number of portfolio companies, Home Choice, Stationary World, Coalbush, and we have indirect investments via mesh structures in island car rentals. Our initial investment was approximately $435 million, and our total portfolio now stands at $1.18 billion. Home Choice is a good example of what we have done. We have seen growth in revenues, growth in profitability, expansion of product offering, greater tax payment to the government of Jamaica, which is a very important consideration. But certainly our hope is that Home Choice will, in short order, list on the Jamaica Stock Exchange, allowing all Jamaicans to continue to participate in their growth and their development. Our second pillar is indirect investments to JASMIF, our private equity platform run by actors out of London. This gives us exposure to a diversified portfolio of SMEs in partnership with the Development Bank of Jamaica. As at December last year, they have deployed close to $2 million US across several investment opportunities. And then thirdly, as I said before, our third pillar is Kingston Properties, where we hold approximately 23%, and that investment is valued at, our initial investment of 1.57 is now close to 2 billion Jamaican dollars. Okay, at this point, I'm going to hand to Stuart, and I'm going to come and close with our promises for 2026 onwards.
Thanks, Riz. Good afternoon, shareholders, stakeholders, members of the VM family. I'll just share with you a brief overview of our 2025 performance. You'd have heard some of it in the chairman's report as well as Riz's report. I just want to provide some context to the numbers that you're looking at. 2025 was a challenging year for the business. It was characterized by continued industry pressures stemming from a tight macroeconomic environment in which we operate. This environment resulted in higher interest rates, which constrained borrowing appetite, a soft local equity market reducing investor activity, both of which weakened demand for capital marketing, financing, and impacting deal flow negatively. Market performance reflected these challenges. The JSE Annual Market Index declined by 5.3%, a notable drop from the plus 3.1% in 2024. Additionally, we experienced significant volatility in global markets, which limited trading opportunities. The impact of Hurricane Melissa, which disrupted some of our operations, a further contraction in the economy, the real GDP declining by 7.06% compared to negative 0.8% in 2024. In short, again, I want to say it was a tough year. But despite the headwinds and a particularly rocky start to 2025, the resilience and determination of the VMIL team were evident. So while we began the year incurring losses, we steadily regained the momentum and ultimately closed the year on a stronger and more positive note. At this time, I'd like to give just some big up to the team, the VMIL team, which actually were key in us actually closing out the year strong. Just to give them a round of applause, please. As it relates to our 2025 overview, we had a net profit of $166 million. Net profits are actually down 70% against prior year, but I just want to put it in context that 2024 included results of one-off gain of $422 million relating to the gain on the sale of our interest in Caroline. So if you excluded or normalized the year-over-year results, would have shown a 24% year-over-year increase. As it relates to our NII, this is actually up 24% as we continue to benefit from the downward adjustments in interest rates by the central bank. Other operating revenue was down 30%, of 9% when normalized for the Caroline gains, and was driven by gains from investment activities. Net fees and commissions were relatively flat when compared to the prior year. Our total consolidated revenue was actually down 10.8%, but we spoke about that. If you normalize it, it would actually have been around 9% year on year when you exclude Caroland. As it relates to our total operating costs, we showed an increase of 3.7%, which was below the 12-month point-to-point end-of-year inflation rate of 4.3%. This was mainly led by a reduction in the provisions for credit losses due mainly to the improvement seen in the market value of some of the assets backing our loans. Our share of profits in our interest in Cape rate was actually down 22% year on year, and was due mainly to the fact that they were adversely affected by the foreclosure of one of its investment properties. So yes, they recorded $151 million, but it was actually down $42 million, or 22%. We remain, our total assets under management actually increased and was up 2.2%. And was mainly led by the growth in the investment securities, showing there of 27%, and remain compliant with our capital adequacy, which showed at the end of the year at 15.17%. As it relates to our revenue performance, we spoke about the overall other operating revenue. As you can see there, the complexity in terms of 2024 versus 2025. In 2025, both the gains, 2025 and 2024, both the gains and investments actually led those two lines, as well as the fees from debt fees and commissions. As it relates to the segment analysis, treasury and asset management are actually up year over year. Corporate finance is actually flat, and bond, equity, and digital asset trading actually showed a decline. Majority of that decline had to do with the gain on the sale of Caroland. Our total assets up $35 billion, up 15%, which is $4.6 billion. Our capital adequacy, we mentioned that already, showing 15.17. Actual target rate is actually 10%. Our interest cover is actually 2.1. Our cash actually reduced, and that was mainly us investing and optimizing returns. Our borrowing decreased 17.27%, and that was showed and reflected in the NII improvement. And the interest coverage, as I said before, was actually up 2.1% versus the 1.5 actually showed. As we position the company to be future ready, we have made deliberate and strategic investments in strengthening our core systems and over the past several years. The investments are centered over three key pillars: our people, our processes, and our technology. Our people reflected in the 15% year-over-year increase in staff costs. As a knowledge-driven business, we recognize that our people are our greatest assets, and getting this right is critical to our long-term success. Our processes, we have made significant progress over the past 2 to 3 years, evidenced by a 72% reduction in settlements as it relates to with customers, and notably meeting all our statutory and regulatory filing deadlines for the first time in 3 years this year. Our technology, continued enhancements to our systems. We're focusing on improving efficiency and enabling simpler, more effective product delivery to our clients. Importantly, these investments are already yielding measurable results. What have we seen so far? We have achieved 3 consecutive profitable quarters. This is where you clap. We have declared dividends after more than 1 year. Again, you clap. We have realized meaningful cost reductions, particularly in settlements with customers, audit fees, and legal and professional fees. And these are trends that we expect to continue. As we look ahead, our sustained investment in these critical areas will strengthen our ability to deliver premium, innovative investment solutions to our clients, while driving consistent value for our shareholders, stakeholders, and the wider VM family. Again, tough year, but resilience displayed. I'll hand over to Chris.
shouldn't come after Stuart, you know, Stuart like a preacher. Amen? Amen. Thank you, Stuart. So what's our outlook for 2026? What are we focused on going forward? I said before, there are 3 imperatives: grow revenues profitably, drive efficiency and transformation, create and build a competitive advantage. What are the focus areas? Our asset management platform, or unit trust, or mutual funds, or portfolio management platform, and our alternative investment platform are all being executed towards ensuring that those revenues cover 100% of operating revenues. That's going to be significant for this business. In terms of our segmentation, we're executing the client segmentation strategy. Clients will receive a service experience that's appropriate to who they are and what they need. And then our digital transformation strategy, we're looking to upgrade our client portal. Part of that digital agenda is ensuring that we're prepared for content opportunities presented by AI. The VM Group has already begun that journey. One of the early applications was the digitalization of our risk profiling process, which improves both the client experience and the operational efficiency. More recently, we've implemented Google Gemini across the group within a secure, closed environment. This provides our teams with tools that will support research, content development, and information analysis. Now, we're still in the early part of that journey, but we believe AI will increasingly play a role in terms of client service, operational efficiency, and decision-making within our financial services space. As with every other investment we make, our approach will be very deliberate and practical, focusing on applications that create value for our clients and improve the way we operate. And Barbados, of course, remains the hub for our regional expansion strategy, with the Eastern Caribbean certainly in mind. So to our shareholders, thank you for your continued trust and support. And we appreciate the opportunity to manage this business on your behalf and look forward to the exciting opportunities ahead. Thank you. Back to you, Chairman.
Thank you, Rez. Well done. Well done, Stuart. Thank you. Before I go on, I just want to acknowledge 2 directors who joined us a while back, but I hadn't spotted them, and that's Mrs. Sandra Shirley Oxley. Sandra, welcome, and Frederick Williams. Frederick Williams. So we have a full house. Thank you. At this time, I'm going to ask for comments and discussions on the reports that you've heard. This is where we throw it open to the shareholders for that purpose. So we have both online and in person. I'm sure they'll signal to me when we have an online item. And if there are any questions in-house, I can see that. So what should I do first? Online? Yes, you're queuing me? Somebody's queuing me? Yeah, online. Yeah. Okay, so we have a question from Lando Graham. VM Investments has returned to profitability, which is great. Forward-looking, what specific milestones should shareholders look out for over the next 12 to 24 months that management believes will translate this operational improvement into sustained growth in shareholder value and share price performance? Excellent question. Rez?
Thank you, Mr. Graham. Great question, and I'm glad to recognize that we've returned to profitability, as Stuart said before. As you can see from our Q1 numbers, we have growth across all business lines for Q1. But what are we executing on? I just indicated that asset management is going to be important. There are some exciting initiatives that we have planned, and we believe that the second half of the year, we're going to be rolling out those opportunities. That's the first thing. Secondly, we are well on our way in terms of the expansion of our Barbados business. A lot of those decisions will require board approval and regulator approval. but we are on that path. And thirdly, our digitalization initiatives. We want to not only create efficiency in the business, but also improve the client experience. So we have a client portal that we launched a few years ago. We want to add as much functionality to that platform as possible. Why is same important? Because there are some clients who do not need the service of a wealth advisor. They want to be self-served. So we want to ensure that we provide all our clients with various opportunities to engage with the business. So over the next 12 to 24 months, we'll continue to report on those 3 initiatives.
Great. Thank you, Rez. Question on the floor? From on the floor? Yes, sir. Stand and state your name and
Good afternoon.
your question.
Yeah, my
Good
name
afternoon.
is Douglas Wilson. I'm a shareholder.
Yes.
I've listened to the presentation. I have to commend the team for basically, you could say, putting things in the right track, on the right track. The outlook is positive, I would say. But I have a concern, and that's what I'm raising now. The share price has been low and sluggish. But that's not my concern. Here's my concern now. Conventional wisdom would say this is a good time to buy because based on the future. When I look on page 52 in your annual report, there are 6 senior managers who have nil shares, as well as about 4 directors. And in terms of confidence, it's not sending the right message. This is a good time to buy. I'm not telling another person how to spend the money. I have no right to do that, but send the message to us that we're on the right track. That's my concern.
Yes. Okay, we hear you loud and clear. You're obviously preaching to the converted here, right? Because my shareholding has remained at an extremely high number, and I'm prepared to keep it at that. So yes, we hear you loud and clear, and senior members and directors are making those considerations as we speak. Yes, ma'am. You have to wait for the microphone.
Good afternoon, everyone.
Yes.
Shareholder. Clarity first, sir. Are we going to be able to have questions outside of these presentations?
So these questions are specifically about the reports that you've heard.
All right.
Once we finish the other business, then the floor will be open for all questions, anything that the shareholders want to ask, because the shareholders get what the shareholders want.
Thank you, sir.
Okay.
However, I must say congratulations on the promises made and promises kept. I was not here, but I think that's very commendable. And following from that, let me tell you people, and I say it all the time, leadership is important. And Mr. Courtney Campbell, and I've written it here, his communication strength, his integrity, his probity, his uprightness, his honesty has led the ship, steered it very well. Yes, yes. I did hear some reasons for the volatility because I had that question. However, I'm not sure if I heard about the global political climate that is affecting the whole world.
Sure.
Did I hear that?
Well, it's in everything that we do. So when we talk about the macroeconomic environment, we are buffeted by the international winds that drive those for the country as well as our own business. We have business in Barbados, we have business in Jamaica, we have business with our diaspora as well, and all of those are impacted as well as our national economy.
And so the BRICS business has been taken into account as well.
Yes.
For you who maybe don't remember, Brazil,
India. Russia,
yes,
India,
China,
China.
and no, Brazil,
Russia, India,
Russia,
China.
India, China,
Yes, sir. And South Africa.
That's
Yes,
right.
yes.
Those companies.
Yeah, so
those
we continue. I
countries,
mean,
sorry.
all of those things have an impact on us, and we have global investment portfolios for our clients, and so those too are impacted regularly, and we stay abreast of all the developments and try to get out in front of those things.
Wonderful, and I hope prayer underpins that, because without that, I'm telling you, you are going to make the wrong choices. So far, you're good.
Thank
Now, AI, I heard you, but how is that affecting redundancy on staff? I love to interact with people. I don't like machines. I use them for the utility value,
so
but that's it.
Can I defer that one to the later part of our conversation? I want us to, yes, we're going to deal with it. We're going to take it, but I want to deal with that at the latter part, because that one, that's a literal rabbit hole. We could spend an hour discussing that, right? So I'm going to go to the online question. Thank you for those questions, shareholder. And we'll address the other one. Please make a note of that one so I can come back to it. Question from YouTube, but I don't have a person on this. I need a person. I can't go without a person. It needs to have a shareholder attached to it. So I'm going to skip that one until we have a name. Yes, because we're answering for shareholders. Yes, this is an issue. How do we handle this? Any more in the room? Yes, I'm going to come back to those. Any more in the room? What, we've answered all the questions already? Okay. Let me see if I can put, yes. Yes, sir. Please stand and state your name.
Robert March is the
Okay,
name.
sir.
All right.
Shareholders get what they want, right?
Shareholder.
Yeah.
All right. When I bought the IPO at 233, I discounted rate. Now, can someone explain to me the reason? Is it sentiments, bad loans, debts? What is causing it to drop so much and not coming back up?
Yes.
You know what I mean? Can somebody explain how
Yes,
how
certainly.
this up and down work when
Absolutely.
the share price drop?
Yes.
What makes it go down in detail?
Yes.
If they can explain in detail how that stock price works. Is it people selling shares and it goes down? Is
Sure.
it people buying shares and it goes
Right.
up? Can someone explain
Rez,
in
you
detail?
want to start with the market?
Sure. Great question. And I must tell you that the Corporate Governance Committee and the board, we talk about the share price every single board meeting. So I want shareholders to believe that an important metric in terms of creating shareholder value isn't discussed at the board meeting, right? So first of all, I think we have to look at the macroeconomic environment, fine? It has been a very tough market for a number of years. Immediately out of COVID, that excess liquidity had to be mopped up, interest rates rose. If you look on the financial performance of the entire sector, we've been challenged since then, right? This young lady asked a question in terms of the same one, in terms of the geopolitical considerations. So when we entered 2025, our view was that rates would have fallen. Rates have not fallen. So we have that pressure in the overall environment. We have high interest rates, but also all have negatively impacted stock prices across the board. I don't think you have a few aberrations, but across the board, stock prices are down, whether it be an APO price or IPO price. Let me give you some statistics, because I asked a young analyst to use AI and give me some information. Give me 2 seconds.
Well, yeah, you don't need AI to know that the market from coming out of COVID till now is down and has been down on a sustained basis.
Yeah. So let me give you some numbers. So I look at the price to book, right, to see how we're trading vis-a-vis our book value to other entities. I won't call the names, but there's one company, the price to book is 0.6. Another company, the price to book is 0.5. Another company, the price to book is 0.52. There are 2 financial conglomerates. Price to book is 1.03, 1.4. There's a standout in financial services of 2.3. Another player in the space of 0.67, our price to book is 0.89. So, yeah.
So yeah, explain a bit about
no problem. So on AI, no problem. So the book value is the shareholder value as seen in the financial statements. It's the shareholder's equity divided by the number of shares. Simply means if you were to liquidate the company today, you would get X dollars per share.
That's the book value.
That's the book value. So we're trading close to our book value relative to others. We're trading at 0.8 of our book value, close to 0.9. Others are trading at 0.5, which is a good indication that we're certainly doing things better than them.
Right.
However, what we have to do in this business is that we have to drive the performance of the business on a consistent basis. So we are not pleased with the net PAT number that we have delivered. We're not pleased with it. Our intention is to get to double-digit ROE. We believe that we get to double-digit ROE and build a resilient business that we see the share price moving up where we can pay consistent dividends. Right? So we have to just work all way.
Let me give you a little
we're executing on.
Sure. Let me give you a little translation on that. So I think okay, your ROE or anything I did, right? But the fact the fact of the matter is that I think everybody recognizes that the market has been in a tough spot, right? The economy has been in a tough spot. Interest rates are high. You can put your money away on a CD, buy a bond, and you're getting a decent return, right? Invariably, those are the opposite type of returns for when you invest in shares, right? You have a committed stream of income. You know what you're doing, right? So once those are high enough, money moves from taking those kinds of risks on equity and moving into the more sure for onshore. That has a very negative impact on the overall market, and that's what Rez is really saying, is that nobody really wants to be trading below their book value, because your book value is your tangible worth, right? That's if you sold everything, you'd get that cash in your hand. So why would the price be below that? What is the reason for that? And invariably, that is because the outlook of the people who are in the market are saying, well, you're not really going to sell the things, right? You're not selling all your bonds and everything, and so you're not going to give me that cash. And so really and truly, I want to come out and go into something else, and that's why the price trades below the book value. Or you can have very negative sentiment, generally, very negative sentiment about the future of the, right? And so that's a number that we pay attention to. Relative to others, we realize that we're all in this boat, and the performance of the market and the values have been very lackluster. That being said, one of the ways out of that is for stellar performance year after year after year, which is what we're trying to get at, is to maintain consistency and deliver better performances even in the face of that market. The unfortunate thing is that a company that produces cement, their share price is based on the value of them selling something completely different from what the share price reflects, right? The share price is a financial instrument, but the cement is a physical good. We are in the business of money. We are in the business of that same share price. So when the financial market is bad, and everybody knows the financial market is bad, and they don't like the shares, we are also having a hard time at the same time because we play in that market, right? And so, selling shares to other people, doing IPOs and so on, those markets are not particularly strong right now. But the good news is that we see improvements. We see movements in that. And the fact of the matter is that there's a reason why we've been around for 147 years, right? And so this game is not a short-term game. This game is for long-term sustained shareholder value. And we believe that if we do if we do the right things consistently, we will emerge at the other end stronger and more valuable for our shareholders. And that's what we're about. Okay? Does that, yeah? So stick with us. Stick with us. We know what we're doing. Yeah. No. This is a business that has, it has risks. It has risks, and you don't always get it right. And that's the point about resilience. That's the point about corporate governance, is that you have to manage those risks. We are taking risks. This is a business of risks. But the fact of the matter is that that's our business. That's what we excel to be the best at. And that's what is going to deliver the kind of numbers that you are looking forward to, which I'm looking forward to, which we're all looking forward to. So stick with us. Okay. Right. Okay. Any further questions on the reports, specifically on the reports? On the financial statements reports, yes. Yes, those are the number. 14. What time?
First one, what are the plans?
Yes.
Livingston, yeah. What are the plans to grow VM Wealth Group? Sure, Livingston, yeah. Everybody know me. So what are the plans to grow the VM Wealth Group?
What are the plans? Yeah. Well, you heard
2025 and 2026.
26.
26 and 26.
26. So Rez just spoke about where our focus is. Oh, you are late. Okay, so our primary this year, our primary target is to build out our asset management business. Right? What is that? That is where we buy assets, we invest in assets, and we provide those asset opportunities to our clients, our unit trusts, or private equity, all of those things roll into asset management. And that's where we are staking our claim, among other things, because of course you have to have other, he's back, I see. You have to have other streams of income, but that's where we are focused.
Yeah, can I say something? I have $100 US dollars in I have $100 US dollars in the bank down there. And when they have an IPO come out is VMIL, and I never want it still. So I tell them, say, sell me some of it. And that I start my portfolio with, because I tell the truth, grow. Because when me use my portfolio, the money when the shares grow. So I use the money and open my portfolio. The next, in just one time, it grow. All right, the next one. A friend of relatives of a US, them invest in US bonds and stocks over there. When you look at the portfolio, very healthy. Because of listen very carefully now, because of the Jamaican declining dollars, we agree say it's money saving, but we're not see, as a shareholder, we're not seeing any growth in the investment. What are the plans to do for try to see if we can get dollar to return?
Yes. So there are a host of portfolios that we provide our clients. Right? Some are doing very, very well, others are doing not so well. And the idea that we constantly promote is this idea of diversification, because nobody has a crystal ball, right? And so we have real estate holdings, we have bond holdings, we have equity holdings, we have international equity holdings, we have various ways of ensuring that you have fixed income holdings and so on. And so all of these portfolios make up our asset management class, and that's what we try to get our investors and our clients to invest in and keep diversified. And if it's not working today for you, tomorrow for me, today for you, right? So that's how investment works. It works on a cycle.
I can turn to page 102. Income statement.
Yes,
income statement. 22, note 22. There, Mr. Chairman.
I'm getting there, sir. I'm getting there. Income statements. You're right.
Yeah, the group, 2025, 2024. All right, financial losses, others, interest expense. What made up this others of 450,000 and million and other interest expense of 1,550,000 in 2025 alone? Others, interest expense.
Okay, so you know that, all right, so the interest revenue, the cost of us investing in the loans, providing loans, etc., providing other investments that generate revenue, has an expense with it. It has to cost something, right? And so that interest expense should be read in tandem with the interest income at the top. See the interest income?
Yeah, let me see it. Yeah.
Right. So you had 1.7 billion in interest income, 1.5 in interest expense, leaving you with a positive net interest income of $187 million. So that's the business that we're in, managing the differences between our income revenue and our income expense. That's a part of the business.
The details, sir, are provided on page 131, where you have no 20.
Yeah, look at.
Did you get that?
I'll go and look at it. Yeah. All right, look at this other income. 2,563,000. What make up this financial losses?
No.
2 billion
No, tell me where you're seeing that. Tell me the line that you're.
No,
quoting.
financial losses or losses. 22.
Leases.
Yeah, leases.
Leases.
Yeah, leases. Yeah.
That's a huge difference for us. Losses versus leases.
Yeah, leases. Yeah.
Thank you. Okay. So we're very happy with our financial leases of 2.5 billion. And those are, as it says, we offer leases to companies for machinery, equipment, etc.
Look in the middle at the last one, Mr.
All right, last one though, because I have a gentleman behind you.
Yeah. Look in the middle. Look in the middle. 2024. 16 million. The same page, man. The same page, man. The same 22. Yeah, they right in the center. 2024. 2004. 24. 16,476,000. The breakdown there. Give a little explanation.
I can't. I'm not sorry. I don't.
You see there,
I'm not
Mr.
seeing
Chairman?
it. No, go. Stuart.
So that, sorry.
You want?
Yes, sorry.
22, man.
Right.
22.
It's on page 102, right? It's the 1, 2, 3, 4th line, right? On the other
Right.
interest
Correct.
interest income, right? So our investment portfolio mainly compiled of loan receivables, investment securities, and repurchase agreements and resale agreements. This is what we earn income from. We do, on the offset, actually invest in other things that would outlier and that would generate income, which would actually fall into the category of other in this line right here.
So collect all the receivables and receivables.
Yeah. Okay.
And other.
Yes. Thank you, Livingston. This is going to be our last question in the segment. And then remember that we return for Q&A, but I want to respect people's time. Sir, standing at the back. Yes, a question about the report specifically.
Yeah.
Your name?
Howard Fong.
Howard Fong. Yes.
Shareholder. All right. On page 102, statement of comprehensive income. Is this a printing error? Profit for the year, the group 165,975 million, and the company 352,197 million. How can the company be less than the group?
Okay. So there's more than one company in the group. Right? So the group is the consolidation of all the companies. And so the company has made more than the total sum of the other companies. And so the company is a part of the group. Because this focuses on the specific company, VMIL. Right? You also have VM Wealth Management. Right. Company. So you have two companies that make up the group. VMIL and VM Wealth Management. So in this case, VMIL has made more than VM Wealth Management. VM Wealth Management has pulled down the profitability from VMIL to VM Wealth. Yes. In this instance. Yeah. Okay. I'm going to close it here for the reports. I know, but we are well over. Burning question. Yes, sir? Okay. Burning question. A succinct burning question.
Pleasant good afternoon, Lancel Bloomfield here.
Yes, sir.
Shareholder.
Yes, sir.
Mr. Chairman.
Yes, sir.
In a most recent media release by this company, you have laid off some 16 staff members, and the ability for customers to purchase stocks and other investment instruments at VMBS Duke Streets have been stopped or halted. This company has some excellent staff. Why are you laying off such excellent staff? And other than VMBS Knutsford Boulevard, where else can the public make their purchases of equity?
Okay, thank you for that question. Rez. Yes.
Thanks. Yeah, so great question. Yeah, we did do some rationalization of the branches. Duke Street was impacted and Portmore was impacted. Why is that important? Because as I stated in the report, I stated in last year's report and 2023's report that we're embarking on a digital strategy for clients to self-serve in terms of many of the things that we do, or our client that we all do, whether it be equity trading, making requests. So the portal has been expanded to provide that functionality, right? We did say when we expanded number of branches, I believe in about 2020, was that we said that we do that, but as we invested technology to provide the experience, we cut back on the number of branch locations, and that's what we have done. So clients are able to be served at New Kingston, and also online.
So you have to expect that as the business also shifts and we remain agile, that there are some skills that we are not going to need any further. Some people will be retrained, others will be separated, but then we're also hiring. So what we look at is the net retention figure. But that's going to be always an example or a sign of a dynamic company, is that we're always evolving and trying to keep costs down, right? Trying to keep costs down so there's greater shareholder value, because that's a part of it, right? Okay, thank you very much. And we are going to move on. I want to thank you for that robust discussion and thank our shareholders for being engaged. It's very important to us and we take it very, very seriously. Now we're going to move to some matters of business that we have to contend with. So the first order of business is for the approval of the auditor's report, the financial statements for the year ended 31 December 2025, and the director's report. Could I have a motion to adopt? Yes, ma'am. Beverly Gustav moves. Mr. Livingston Young seconds. The online voting instruction will appear on screens for voting. We will allow 1 minute for voting to be completed and then announce the results. For the people in the room, all in favor? Aye. Show of hands, right? Any against? Any abstentions? So for the people in the room, the ayes have it. I'm sorry? You're abstaining? Yes, ma'am. Okay, we have one abstention and the rest are ayes, and we wait for the count at the online. And cut those to 30 seconds. Cut those to 30 seconds. For what? We're voting each one. I have the arm. Okay, that's the end of online voting. Do we have a tally?
Yes.
Okay, so our motion is carried with 42 for and 0 against and 1 abstention. Right, 1 abstention. Okay, thank you very much. We move on to the next resolution, and that is for consideration of the election of directors. Resolution number 2A. The following directors retire pursuant to Article 108 of the Articles of Incorporation, who being eligible offer themselves for re-election. A, Mr. Vikram Demon. B, Mr. Noel Han. C, Mr. Milton Samudo. I therefore propose a resolution for the re-election of the directors en bloc and ask a shareholder to approve this motion? Yes, sir? You're approving. Okay. Thank you very much. May I ask another shareholder to second? We'll get you next. Okay, thank you. Lansdale Roofing seconds. The online voting instructions will appear on screens. We will allow for 1 minute for voting to be completed and then announce the results. In the room, all in favor? Any against? Any abstentions? So motion carries in the room, and we'll wait for the online voting there. Okay. We have completed the minute and wait for the results. So the motion carries online as well. 40 for, 0 against. So thank you very much for that as well. Resolution 2B, can we? Sorry, that's en bloc. I'm sorry. Right. So we're back to 2A, yes? Right. Okay. So that was the en bloc vote, the vote to take them en bloc. And so therefore, I propose a resolution for the re-election of the directors, Vikram Demon, Noel Han, and Milton Samuda. And I ask a shareholder to approve the motion. Yes, ma'am. Thank you very much. Okay. Thank you. We have a seconder. And again, the online voting instructions will appear on the screens. We will allow for 1 minute, but if you take 30 seconds, I won't complain, for voting to be completed and then announce the results. In the room, all in favor? Aye. Aye. Any against? Any abstentions? The ayes have it in the room, and we'll wait for the count online. Thank you. Okay, that's the end of the minute. And we have 44 for and 1 against. So the ayes have it. Thank you very much. Resolution number 2B. Director Dennis Cohen was appointed as an addition to the board since the date of the last annual general meeting. The appointment was effective October 1st, 2025. Mr. Cohen will retire pursuant to Article 106 as at the date of this meeting, but shall be eligible for re-election. The resolution is that Director Dennis Cohen, retiring pursuant to Article 106 of the Articles of Incorporation, who being eligible for re-election, be and is hereby re-elected. Everybody knows Mr. Dennis Cohen? Yeah. Mr. Cohen, could you just stand for me, please? So people can proverbially kick the tires, right? See, a trustworthy face, you know, right? Yes. Right? Yes. Okay. So, may I ask, I propose a resolution for the re-election of Dennis Cohen, and may I ask a shareholder to approve the motion? First mover. Yes, ma'am. Michaela Gale. Michaela. Miss Gale. Mahalia is one of my favorite artists. Okay, and seconding. Thank you very much, Miss Clark Allwood. And the online voting instructions again will appear on screens. We will allow for 1 minute for voting to be completed and then announce the results. But for those in the room, all in favor of Mr. Cohen? Aye. Aye. Any against? Any abstentions? So the call is unanimous in the room, and we await the online shareholders. One. Okay, voting has ended, and the tally is the motion carries 44 for, 1 against. Thank you very much. Welcome, Dennis. Again. Resolution number 3 for consideration for the shareholders at this time is directors' remuneration. The amount of $29,594,000 included in the audited accounts of the company for the year ended 31 December 2025 as remuneration for their services as directors be and is hereby approved. That is the resolution at hand. Yes, sir. You have a question? Yes. It varies. Invariably, it will. With our inflation, it goes up, but it can also go down sometimes. It can drop. I don't know. Well, it also is a function of the number of meetings that we have as well, too, right? So it does have a little variability in it, but I expect that it will remain or slightly increase. Yeah, based on inflation. Absolutely, 100%. So, with that, could I have a motion, a mover? Beverly Lawrence and Livingston Young seconds. Yes, sir? Yes. Okay. So you're nodding. I'm just making sure. Yes, sir. Okay. All right. The online voting instructions will appear on screens. We will allow 1 minute for voting to be completed and then announce the results. For in the room, all in favor? Aye. Any against? Any abstentions? The ayes have it in the room. All right. Okay. I catch up. I don't want to catch up. Okay, voting has ended, and we await the motion has carried 44 for, 0 against. The ayes have it. Thank you. We move now to the last resolution of the evening, and this is resolution number 4. The consideration is for the appointment of the auditors. You'd have heard earlier that we thanked KPMG for their years of service as our auditors. And this resolution asks for PricewaterhouseCoopers. What about dividends? You mean a resolution? No, you want, this is a resolution. We've already approved, the board has approved the dividends, and the dividends were issued.
No, we are talking about it now. You said the last.
No. So once we get through the resolutions, we'll open the floor again for the discussions, and you may raise any questions that you have. Yes? Okay. So if I could resume. PricewaterhouseCoopers be and are hereby appointed auditors. Another question? Okay. You're just getting ahead, or you the head right? Okay, I see you. Okay, so PwC be and are hereby appointed auditors of the company to hold office until the next annual general meeting at a remuneration to be fixed by the directors. May I have a motion for the approval of the appointment of PricewaterhouseCoopers as auditors at a remuneration to be fixed by the directors? Beverly Gustav and Karen Boland seconds. Thank you very much. As usual, the online voting instructions will appear on screens. We'll allow for 1 minute for voting to be completed and then announce the results.
Mr. Chairman, I just want to change my price at the KPMG.
We're changing our auditors from KPMG to PricewaterhouseCoopers. And this is the resolution that will allow us to do so. Okay? I'm sorry? I'm waiting. I'm giving people some time. Yeah. Okay. So in the room, all in favor? Aye. Any against? Any abstentions? The ayes have it in the room. And the motion carries online 44 for, 0 against. Thank you very much. And that ends our resolutions for the day. I want you to give yourselves a round of applause. Thank you very much. You did good business in record time. I appreciate the support. At this time now, I invite you to bring to our attention any other matter which may be of concern to you. And for online, please post your comment with your names online. Thank you very much. Yes, ma'am. Wait for the microphone, please.
Thank you, sir. Good afternoon again.
Good afternoon.
I'm Anatol, A-N-A-T-O-L, Clark Allwood. No E on the Clark, by the way.
Gotcha.
Shareholder. Thank you. Sir, I'm back to the AI because based on a response that was given when it was raised again, it seems that the responsibility now is being put on the external clients in order to do their investment. And really and truly, yes, there might be some people qualified, but some people might try and mess up. And then the responsibility is theirs rather than having a consultant who is an expert. So yes. You know, I really have a problem
and
with
we
that,
understand that concern. It is a concern that's, you know, within the wider group as well. But the fact is that there are some people who actually prefer to do self-service, right? And so we have to provide that opportunity for them as well, while maintaining the ability to be able to service the clients who do not feel as confident about using that self-service.
And Mr. Chair, with due respect, how do we do that when you move people to move miles away? You move from Portmore, you move from downtown. People live in those areas, sir. So, you know,
we haven't removed all the people. It's not, you know, the people are there.
Sir, but their waiting time is affected because I'm having that in some of these institutions right now. Okay. Waiting time is affected. And people's time is also important.
Okay, I'm going to ask Rez to speak about specifically the waiting time issue. This shareholder says she's having a waiting time issue.
Okay, no problem. So we do recognize that this would pose a challenge to our customers. We have expanded our member engagement center. Let's call them a call center so we can all understand. Before we had one person in the member engagement center. Now we have 4 persons. They have gone through training. They are in the process of being approved by the Financial Services Commission. They can answer any question that you have. So there's no need to get up, get dressed, put on clothes, waste your precious gas from the comfort of your home. You can call, if you can't maneuver the computer to get online, you can call and they can answer any and all questions. And if you don't get through to them, Mr. Marsh has my cell number. He visits me at least quarterly. You can give me a call and I'll ensure that your challenges are being addressed.
Do you have suggestion boxes online then? I'm serious.
Yes.
It's a serious question.
We do not have suggestion boxes online. However, we do interview our clients at least quarterly. Not all clients do a sample to get feedback in terms of how well we're serving our customers. And from that survey, we certainly understand the pain points and seek to address them.
On a lighter note now, do you recruit students in schools to be a part of this institution?
We do, and proudly so. There are Carice Gray, could you stand? So Carice, she's a bit older now, if I may, but come to the fore, Carice. Carice, what's your title? She's a manager of the trading department. Her department made at least $400 million last year. Carice came in, come to the fore. Carice is an AXI graduate under Nicole Adamson, if I may say. Carice came in as an intern, herself and Akanke Scott, who is not here. And she was so brilliant that we had to take her, couldn't leave her to the competition. And she has done very well, won a trading book under the tutelage of Denise Marshall Miller. So we do take on interns. A long-winded response, but I'll show you evidence.
Hold on, that's my question.
The question?
I'm not sure I am understanding. Forgive it. I'm 82 going on.
The answer is
82.
yes.
Okay. No. Hold on, because I have grandchildren and I don't feel it in the schools in terms of being recruited. In other words, if I would have to be opening an account for my grandchild.
No. We do lots of that. Okay, so let me give another example.
So
example.
was I mistaken?
No. I misunderstood you.
Okay,
I was
so
just too eager to brag.
Okay.
Right?
We were happy to highlight our.
Okay. Take a bow, lady.
So we do actually last year we had an initiative with Investing where we sponsored about 100 students. They had a training at UE and we sponsored the open of their account. So we do that as a matter of our CSR and ESG policy.
Okay, thank you. Glad to hear.
Okay.
Please expand it.
The
last thing. When will we stop these hybrid meetings, may I humbly ask? When
will we stop?
Yes.
Well, that's really a function of the shareholders' demands, right?
Really? Oh.
Yes. So,
they don't like people like me.
Well, some people, this is what we try to do, is accommodate all our shareholders, but some people like it online, some people like it this way.
And it works if you are overseas, actually.
Exactly.
But then minutes of the meetings are my favorite thing that I'm going to after that. Are minutes available for last time? The minutes of the meeting, are they available?
Absolutely.
I didn't get any. Don't tell me about online, please.
We will provide it by end of the.
Are they in the room?
Thank you. The gender business.
Okay,
now.
we're gonna take some. We'll come back to that one because you're going 4. You're going 4. Mr. Young, I'm going to take one online. So if you could, right? This is from I assume it's a Miss Hall. The question is: no dividend was declared for 2025, and the stock lost 50% of its value this year. What is the board's dividend policy going forward, and when can shareholders expect a resumption of payments? I'm happy to report that we have indeed, as I reported at the start of this meeting, that we have indeed resumed dividend payments. It's not as great as we want, and we are always driving to have it greater, but we have indeed resumed as a result. Earlier, when was it, Rez, the last month? It was paid actually today, but we approved it last month. And so that is correct. The second part of the question is the cost to income ratio hit 101.49%, the second year above 90%. Staff costs alone rose 15% to 1.28 billion. How will management bring costs back below 70%, and on what timeline? And this is a fundamental question for us, for the management and for the board, is that our cost to income, and if you understand the cost over the amount of money that you make, we always have to look at that number. And so sometimes the income falls when income is weak. So that number looks very large, the cost to income, even though the cost may remain. Sometimes the costs go up and not as fast as the income. And so that number is a very important number, and 70% is a good place to be. We are not there for a number of reasons, and Rez is going to give you a little bit of color on that. Thank you for that question.
Yeah, great question. Again, these are discussions taking place in our management meetings and our board meetings. There are a number of initiatives that are being executed, started last year. Mr. Andrade, that sits behind me, is chairing a cost reduction team. We've identified a number of of expense items that we're working to eliminate to reduce some cost. Stuart has a number, but I know he won't share it here. Across the group, there's a wider group initiative. We had the services of London Consulting Group in the VM group last year, in a specific subsidiary that yielded some positive returns. That framework is being rolled out in VM Wealth VMIL, and we are on track in terms of execution. Yeah. So we're targeting a number. I don't think we'll get to 70% in 2026, but certainly that's the That's the benchmark that we'd like to achieve, because that's the benchmark for financial services firms globally.
Yeah, I'm gonna ask Courtney to say a little bit about our cost efficiency initiatives, because it is indeed group wide. But let me just point out that while staff costs were up significantly, and we've talked about it being a talent business, overall costs, operating costs, were up by 3.7%. Right? That's actually below the inflation number. So it is not that we are, spending like drunken sailors. We are driving that number. We're trying to hold that number as much as possible. But of course, your talent and your competition for talent is an element that we have to manage quite actively. So Courtney has responsibility for the overall approach on a more macro basis. And so I'm going to just throw it open to him to say a few words about that.
Can I just sit here?
Sure.
Okay. Yes. Thank you, Chairman. So yes, as the Chairman says, we are actually tackling the operating costs of the group. And very seriously, we committed to a group efficiency exercise that was executed from last February through to the first phase, last February to November. And the good news is that the early indications are that it's achieving the targeted results. We focused on the largest subsidiary in the group first, which is VNBS, both front office and back office. We then looked at the group services. And now, as Mr. Burchinson indicated, we are now looking at VM Investments Limited, VM Wealth Management. And we expect that that framework will continue to yield positive results. Just to say that is an initiative being led from the group. The chairperson of that is our group CFO, Mr. Frederick Williams, one of the directors of VMIL, who will raise his hand, and our Chief Strategy Officer, Carla McIntosh Gordon. But they have an excellent team of project champions working with. We're looking at processes. We're looking at how we go about budgeting. We're looking at some of the key expense lines, such as, for example, our IT expenses and the total cost of ownership. We have to keep investing in IT to support the digital channels, but we wish to ensure that we're doing it in a smart way, and that we're demanding the very best from our vendors. So that's a comprehensive approach we're taking to deal with the costs. And as I say, I'm very encouraged by the early results.
Thank you, Director Campbell. So I spent a little more time on that because it is something that we take very, very seriously. And obviously, you want to grow your income. If you grow your income, you grow your way out of it. That's a part of it, but you also have to be disciplined about your costs. So in trying to grow, you can't overspend, right? But that's the nature of the business, is that you have to spend to grow. And so we're busily doing that, and we hope to get the balance better than we have gotten it over the last couple of years. Yes, sir. Sorry. No, but you had yours. Let me go to somebody.
It's based upon AI.
Okay.
I think I should be a leader as a Jamaican, not everything we take from foreign and chop on ourselves. I think as a shareholder purposive, we need to be a leader, not a follower. And based upon others, I think if you have a round table talk, or if we do our thing, not other people follow. I mean, I say it's not good for modern technology, not good, don't get me wrong. But we need to have a round table talk, or we have to grow the core business and others. So that's my area.
Okay, thank you. Thank you for that suggestion. Good. All right. Yes, sir. Yeah. Mr. Bloomfield.
Mr. Chairman, 3 quick questions.
3?
Yes.
Let's try.
By the way, first one, does this company has any non-performing loans? And if so, elaborate.
Yes. The result? Non-performing.
Yeah.
Percentage.
Yeah, correct. Great question. Yeah, we do have some non-performing loans. We've been impacted like all the other companies in the financial services that's based on the tight environment. I think the financial report speaks to the provision that we have taken for some of these facilities. So for example, in 2025, the impairment was $77 million. For 2024, $163 million. So we have been impacted. We had to...
That's page 102.
Same page 102, thank you. We had to relook at our credit policy in terms of how we approach our that line of the business. But we believe that there is still some residue that we're working through. A very, very tough book to right size, but we're committing to same.
Okay. All right. My second one is, Mr. Chairman, so recently you have introduced this machine into VMBS NotSod, where before you go to the teller, you have to enter a lot of data. I purchase stocks, and in lodging the money, I have to go to this machine, enter a lot of data. It doesn't carry a button that you can just put that in. So even though you have some friendly staff that would assist, you have to spend a lot of time at the machine, and the place would be empty, and you have the line piling up behind you. So what is going to be done to make that process more efficient?
Good question.
Are we talking VMBS or VMWealth?
VMBS.
That's what I was asking. Was that you? So that's not a VMIL.
Yes, but it impact on you because you have to purchase the stock.
I hear you. I'm just making that point. That's not a VMIL, right? But we can ask Director Campbell too. I don't know if he can speak to that.
Well, I think, as you indicated, sir, we do have some very friendly staff who will help you to navigate it. We believe that our customers will get more proficient over time. In fact, we are seeing the improved proficiency. The lines are moving faster. So I'm just inviting you to be patient. If you're having a challenge, we're always going to be ready to support you. So speak with me after the meeting, and I can direct it to the manager and the supervisor to our New Kingston branch. They'll be happy to help. But thanks for your business.
Thank you, sir. And one last matter. Now, Mr. Chairman, it has to do with customer service. Customer appreciation, customer appreciation. I want to say this. I purchase small amount of shares based upon my income, and I'm a shareholder in 70 companies.
Congratulations to you, sir.
Thank you very much, sir. And I use VM Wealth. I purchase small amount through VM Wealth. But when it comes to customer appreciation, I feel left out. I don't feel appreciated any at all. So some people will get the little package and get the little thing, and I don't get anything. So I really would like you to look after us, the small man in the business,
yes,
so to speak. Give us something and make us feel appreciated. Thank you very much.
So for those of you who have attended our shareholder meetings in the past, you know that there are always goodie bags for when you are departing. Right? They are for when you are departing. However, some shareholders take them as them come through the door, right? But our shareholders get what our shareholders want. So we are fine with that. We are completely fine with that. But that is our way of saying thank you for attending the AGMs. Of course, we would like to distribute greater and greater benefits, certainly in the way of dividends, but also in the way of tokens as well. And so I will have a word with Mr. Burchinson.
Sir, I'm talking about VM Wealth in October when you have the customer appreciation.
Okay, we're going to make a note of that. Because
and it is normally the most wealthy in the country.
Yeah, and it never come yes.
And we contribute on a daily basis. Don't get anything.
Okay. I was going to ask how you know that, but anyway, okay, all right. I will take your word, sir, and we will address that. Thank you very much. All right, I'm moving to online, and this is, ladies and gentlemen, it is 5:02, and we are respectful of people's time. We will take your questions, but I'm just letting you know that it's 5:02, right? So we have a question from Ms. Hall again. Loan receivables declined from 4.1 billion to 3 billion. Is VMIL deliberately pulling back from lending? If so, what replaces that revenue? The report mentions a pivot towards fee-based and asset management income, but does not quantify what revenue will compensate for reduced lending activity. Very astute. Over to you, Rez.
Great question. Yes, you are correct. We are pulling back from lending. Years ago, our loan portfolio was closer to $6 billion. We're winding that down at this point in time. What replaces that revenue is going to be asset management. You are seeing the growth in the total assets in terms of assets under management, off-balance sheet assets. That's certainly one. There are other things that are happening in the business. We have brought on talent. We have done a number of interesting structures called securitization that created some value for us last year. So we do have a path to replace the revenue that would have lost from lending via asset management and treasury activities.
Right. So the idea is to go where we believe that the hay can best be made. And the competitive environment for lending, as you well know, is wide and broad. And we believe that we have unique talent and unique capabilities in these other areas. So we are confident that we're going to be able to replace that revenue as we speak. Thank you. Jody Ann Carter Rattigan asks, good afternoon. Is there a reason for the change in auditors? And yes, Jody Ann, there is a reason for the change in auditors. It is our prerogative every year to consider the relationship, the value that we obtain, the value that our shareholders are able to gain from our financial reporting partners and also our audit partners. Audit partners are obviously much more than just reporting. They have to actually provide support in terms of the veracity of our performance and our numbers. And so KPMG has been a partner for many, many years. And we felt that at this time, we would do an evaluation of that relationship and what is available to us otherwise. And in doing that rigorous evaluation, we came to the conclusion that at this time we would select Pricewaterhouse instead of KPMG in this particular go round. And that was a rigorous evaluation process led by our audit committee, our audit team, our own financial control team. And you saw Mr. Williams earlier, and he was instrumental in that process. And we are happy with the results. We thank KPMG very much. They've been great partners for a long time. And it's business, and they understand. People change us from time to time. We don't like it either, but we respect it. We respect it, and we fight harder to get the business back. And so that's just a part of the business. Thank you. Last question. Okay, question from shareholder Yvonne. Fee and commission income have been relatively flat. I wish it was fat. Flat. What initiatives are being pursued to grow fee-based income and reduce reliance on investment gains? Good question again. Rez, you want me to take that? I was going to leave that one for you, but obviously, that is a part of the market dynamic as well. If the market is vibrant, people are having a lot of activities, and they require advisory, they require transaction support. And so, that can also vary with the vibrancy in the market. And so we've seen where that is indeed flat, and it just means that we have to work harder and find those opportunities. And we're doing that as we speak. I don't know, Rez, you want to?
No, you are correct, Chairman. Actually, if you look on the breakout of the fees and commission note, you'll see just what you have articulated in numbers. You're seeing lack of vibrancy in the equities market. You're seeing lack of vibrancy in the capital markets. We're seeing growth in the asset management space, but we have to press harder there by introducing innovative products And I continue to articulate that that's going to be the future of this business. So that's the nature of what
So what we've
materialized
talked
looking
about is
forward.
having diversified revenue streams, and that's the important thing, because some are cyclical, some are counter-cyclical, and the idea is to be able to have a resilient and robust business through good times and bad times, and that's really the objective. $866, $144, $111. You want to take that, Reg? You want, so question from Sherno. Gains from investment activities have fluctuated. 866 million in 2023, 1.4 billion in 24, 1.1 billion in 25. What explains this decline, slight as it is? And how, she didn't say that, I said that. What explains this decline in 2025, and how resilient is the revenue stream given market volatility?
Right. So our 2024 numbers would have included the gain from Carolyn of 422 million. When you normalize this, we're actually showing a slight increase of 9% year over year. To your question, in terms of how resilient is the revenue stream, approximately 50% of the revenue is actually, you would say, fee-based, which is asset management. You can rely on treasury to actually deliver as well. The things that we have to hunt for is mainly the capital markets as well as the global asset equity trading, I would say. So we are developing our pipeline. It's the challenge that we have is the conversion. We've done a better job of it towards the end of last year, coming into this year, and we'll continue to work on it. And you see the results there.
Okay.
Mr. Chairman, name is Damian Austin, shareholder. I'm on page 123, notes to the financial statements, under accounts receivable and prepayments. That's number 10. I'm querying other receivables. What does that include?
123.
That's page 123.
Right.
At number 10, accounts receivable and prepayments.
You have that?
Right. Yeah. So generally, they're the categories that are listed here. In terms of other receivables, those items would have been items that would not necessarily have been actually categorized right here. So there would be things like fee, those things that would be actually recoverable from, and would have been actually as a result of the business, ongoing business, but it's not necessarily coming from the regular operations of the business. So it'd be things that would be generated somewhat as a result of the reconciliations that would have been going on, carrying on of assets, in terms of the deal flow, in terms of monies coming in and going out. Would have those things actually coming in, and as a result, you'd have some outlier actually remaining there.
All right, thank you for that explanation. My last question, on the loans receivable, number 9, could you define for me and others what you mean by margin loans?
Margin, okay. All right, so these are somewhat different from the perspective that what you're doing is that you're using an asset that you would have or own as a basis as collateral, so to speak, to actually borrow. For instance, many persons use shares. So I would have some VMIL shares, and I would say, okay, is that just an example? Bad choice. Okay, bad choice, it says. So everybody knows exactly what is happening. So there are persons who would have borrowed loans and use their ownership of the shares that they have to go and borrow the loan. Now, what happens from time to time is that the collateral is based upon the share price, which may go up and down. And if the share price actually goes down, we now require of the party to actually make. Yeah. So in essence, that is what sometimes has affected our provisions for credit losses.
Thank you, sir. Appreciate it.
Just to be clear, we can't actually use VMIL shares in this case. I mean, I know it was an example. No, but seriously, it's important to say that a company can't use its own shares because obviously that would be a conflict. So we issue margin loans on everybody else's securities, and people issue margin loans on our securities. But I just need to point that out. Okay, that's it. Okay, we're gonna go. I know, I'm just joking. We have the question. The question that we've all been waiting for, the last question of the evening.
Thank you. Once more, for those who didn't yet hear, Anatole Clark Allwood. Thank you, shareholder. Sir.
Yes, sir, ma'am.
How many directors does your article of association require or call for?
Oh, that one is a bouncer. I think require. The minimum is 10.
Okay, but how many do you have in your articles?
No, that's what I'm saying. The maximum is 12. Yeah, the minimum is 7 and the maximum is 12.
Okay, and I've counted 10. However, in that 10, I only see 3 female. And I would dare say that we ought to do something about the gender balance. And as I've said so often, our women are qualified in every single discipline, and there are more women qualified than men. And you can check the statistics across universities here and globally. So, sir, What are we doing about that? And I didn't want to say it, but I kept looking up on the platform. And I'm saying, only the men are sitting up there. And don't get me wrong, I only have to believe it or not. Yeah.
So the fact that the people on the podium at the moment are male does not reflect our either our distribution or our intention where that is concerned. If we were dealing with some other things, let's say we were dealing with mergers and acquisitions, then it could be an all-female team up here. So I'm saying that there are directors and there are team members who are experts and are skilled in many different things. And so across the board, we are aware of the strength in diversity and are constantly looking to ensure that we optimize on that, on talent, regardless. But we recognize the strength in diversity, and therefore that plays a role in our succession planning for our directors. You'll understand that we don't just throw out a bunch and bring in a bunch. So over time, the makeup of our directors change. And you heard today that we've just recently appointed a new director in Samba Ricketts, who sits in front here. And our most previous edition before that, I think was Dennis, and then Maria. So we are selecting the best people for the job and actively looking for director succession with diversity. Does that answer your question, no? We're working on it. It's always a work in progress. But we are aware and we embrace it. And we believe that diversity is important, but talent is the most important thing. And there are many, many women who tick that box and therefore are qualified to be directors at VMIL. Yes. Okay, thank you very much. I think that ends our Q&A and brings our meeting to the next item, which is any other business. There being dividends. We're going to leave right now and go work on it, right? Work on the next one. We're leaving here right now to go and work on it. So, there being no other business, I think that we have addressed all the items on the agenda and therefore move for the termination of this annual general meeting of VM Investments Limited. Motion? Beverly Gustav moves. Ladies and gentlemen, the meeting is terminated. Thank you very much. Have a safe ride home.
Your money should be multitasking for you. With VMWealth's unit trust portfolios, your money works harder, responding to the markets and producing gains that have consistently beaten projections for over a decade. With our portfolios, your money works smarter, adjusting and pivoting based on research